Joining me now is Michael Farkas, CEO of Blink Charging. Michael, it's good to have you back. Let's start with actually the second guest in 2 days who we've had on to speak about EV charging. Yesterday it was EVgo. They're about to go public via SPAC. We also had the news yesterday 7-Eleven is rolling out a bunch of its own fast charging EV stations. What is going to be Blink's competitive advantage?
We're the only fully vertically integrated EV charging infrastructure company that allows us to handle all different property types and all different types of owners. Most of our competitors are specialized in a specific field. We literally are in from designing the hardware, manufacturing the hardware, although we outsource that. The network is ours that operates all these charging stations. And first and foremost, we own and operate a lot of our charging stations. And that's really our main focus.
So we also are learning more about fast charging versus traditional charging, how much charging we expect people to do at home versus at places like a coffee shop or a traditional gas station. What's that network going to look like? What is your market share of EV stations right now?
We believe that most of the charging is going to be done in a residential or home environment, whether that's single family homes or multifamily residential facilities or in dense urban areas, literally on-street parking or in mixed-use garages. That's where we believe a significant amount of the charging station revenue is going to be derived from. And you're looking at roughly about 85% of the market in that home or daytime environment, not really using superchargers. Although there's a massive need for superchargers, and we're very, very heavily involved in that space, we do really foresee an environment where most of the charging is done at home or over long periods of time. It's much cheaper from a hardware perspective, also from just getting access to that energy. The more power you have, the more it costs you for that energy. So people are very cost conscious, and if they could charge their car overnight, we believe that's what they're going to do.
Right. Although our guest yesterday said that her fast charging fill-ups were often cost $8 or something like that. But I know I'm kind of comparing apples and oranges here. I guess your investors probably want to know when you really expect to be profitable. What can you tell us on that front?
If you're talking about a unit by unit metrics, obviously we're trying to focus our deployment, especially those that we own, in areas where there is utilization or potential utilization. You got to look at this industry for what it is today. Throughout the United States, we have a couple of 100,000 charging stations deployed. By some of the lowest estimates, by 2030, we're going to need 16 million, and I've seen even higher than that. It's not right now necessarily about profitability. Obviously, that's always in our thought process. Right now, it's really about a land grab and having as many charging stations we have in locations that we own and operate and have long-term exclusive contracts with.
It's ironic because a land grab is exactly how we were describing it this morning. We understand that people want to get these stations out there. They're being more and more utilized by consumers. Do you expect to get compensated or incentivized somehow from the infrastructure plan?
Oh, without a question. We see a consensus now amongst Democrats and Republicans that the $4 billion being earmarked towards EV infrastructure, there's no arguments on that. There may be arguments on other parts of the bill, but we have a consensus there. There's been a lot of funding, even from the Obama days, Trump days, and what we're going to see from the Biden administration is going to be off the charts. We believe we're going to be able to participate in a very big way because of having the flexibility and because having the locations and relationships that we have. When you look at us from an owner and operator perspective, and that's really competitive to EVgo. EVgo doesn't have their own network. They don't have their own charging stations. They have those from others. But when you look at that side of the business, there's a lot of opportunities from these grants, rebates, of us owning and operating more charging stations and being able to sell those chargers to others who want to own and operate them. So we're impacted on both sides, not just on being able to build out our infrastructure.
Well, we will keep following this space as it grows and grows, and you're part of that. Michael, thanks for joining us today.
Shepard Smith here. Thanks for watching CNBC on YouTube.